Today, we're going to try and answer a question that's likely been on most of your minds since Friday evening. Is this the most profitable shitpost in history? If you're into crypto and you spend way too much time on Twitter, you've likely heard of the $1 million bet between Silicon Valley thought leader Balaji Srinivasan and James Medlock, a pseudonymous left-wing Twitter user recently described as FDR, but not racist and without polio. Balaji has bet that Bitcoin will hit $1 million within 90 days, even dumbfounding the most ardent Bitcoin maxis. But why? Balaji says he wants to ring the fire alarm on the internet to warn everyone that hyperinflation is around the corner and that we should all buy Bitcoin. So what's Balaji's case here? Have the events of the last couple of weeks put us in the fast lane to Weimar Germany-style hyperinflation? Or is Balaji just an eccentric Bitcoiner with more money than sense? Perhaps he's a guy who's hilariously misread the economic moment. Now, you've undoubtedly come across ardent supporters who claim Bitcoin is the 21st century inflation hedge, digital gold. But as inflation took off last year, Bitcoin cratered like every other high-risk, high-reward asset. The Bitcoin as a safe haven theory buckled. Then came the collapse of Silicon Valley Bank, and regulators were reasonably worried that SVB's collapse could scare people and spark a run on other banks. Because just like SVB, most of them bought into bonds when interest rates were low. Now that rates are higher, these bonds are worth less, and the US banks are cumulatively sitting on some $600 billion in unrealized losses, according to at least one estimate. Now, to deal with some of that fear, the Fed took an extraordinary measure. It guaranteed that all SVB depositors would be made whole, and it suggested it would do the same for customers of any other banks that fail in the coming days. So with all of that in mind, let's get back to Balaji's $1 million argument. The banks are insolvent, the Fed will print money to save them, and the value of the dollar will plummet, he says. Get out while you can. And then you've got the other side of the bet with Medlock, who's a self-described tax enthusiast and a market socialist. He jumped in and he tweeted saying, "I'll bet anyone $1 million that the US does not enter hyperinflation." Others quickly caught on to the joke, but Balaji saw an opportunity and offered a slightly different bet. He said if Bitcoin, the 21st century inflation hedge, isn't worth $1 million in 90 days, that he would pay Medlock $1 million. Now, if it is, Medlock would give him 1 Bitcoin. This unsurprisingly took the Twitterverse by storm. Medlock could hardly believe his luck, and people in the crypto industry, many of whom likely share Balaji's distrust of bankers and the Fed, and who also expect runaway inflation at some point in the near future, couldn't believe Medlock's luck either, and they tried to get in on the bet. Some developers even wrote smart contracts to execute the bet. And as of Tuesday morning, the bet seems to be moving forward, but it does raise one question. Is Balaji just setting $1 million on fire? On the surface, Balaji's outlandish move is in line with his belief that insolvency in the banking system will likely lead to an ill-advised stimulus measures, and in turn, hyperinflation. Well, his old college friend seems to have different thoughts. Because Noah Smith, who's an economist and the author of the popular newsletter No Opinion, believes Balaji has it backwards. And he argues that if anything, bank insolvency will lead to deflation. So Smith is basically saying that the scenario doesn't fit with anything that we know about macroeconomic history, and that Balaji is going to lose his bet with Medlock. Smith also dove into the history of US bank failures. During the Great Depression, for example, 1 in 3 banks failed. Prices fell a lot, and libertarian economist Tyler Cohen on his own blog said that a widespread bank insolvency would be radically deflationary. Both economists acknowledge that there are ways the government could usher in an era of hyperinflation, and Smith writes that if American businesses and investors look at those emergency loans from the Fed and decide that the Fed isn't serious about fighting inflation, we could see a rise in inflation expectations. And he then adds, a rise in inflation expectation could cause more inflation to become a reality. Sort of a self-fulfilling prophecy. Cohen's take on how hyperinflation could be created is for the bailout to involve the Fed giving everyone $5 for each dollar they used to hold in their bank accounts, but he reminds us that at least for now, this is not on the agenda. So what do you think about this $1 million question? Is Balaji nuts? Or does he know something the economists and investors don't? Let us know in the comments, and as always, thank you for watching.